Hey guys, Carlos Cortez here with another episode of Scriptures and Wall Street. Hey, before I get started, wanted to give a shout out to my little guy here. Look at Nathaniel. His team jersey just came in. As you guys probably know, we've tried out for many teams here locally, and no coach picked him up. And I don't know if it's politics, if it's his athletic ability. I have no idea. But one thing I do know is that you never give up, right? And so we tried out for 3 teams in the Seehoff program, and basically it's what the major league you want to be in as a youth player, where colleges pull from. So it's not an easy task to make. So he didn't make any of the teams. However, he did make a practice squad. And so what I did was I actually ordered him the team jersey, obviously, with permission. I ordered him a team jersey so that he has a goal. He can hang those jerseys in his closet so that he has a goal that he can earn a roster spot. So he's practicing pretty much every day. They have 3 practices a week for the next 10 weeks, and I'm praying that he becomes better. My goal for him is to play in college one day, and to use those tools in life, right? Wherever that may be. We should never give up on our dreams. We should never give up on our goals. It's just a huge, important lesson. So keep him in your prayers. Hopefully you're rooting for him like I am, that he gets a roster spot. But he's on the practice squad, and I'm just grateful for that. He's not allowed to travel with the team yet, or go to tournaments, but he's able to practice. And to me, that's how you become better, is actually at practice. So I'm really excited about him. And I just wanted to spend a few minutes saying, I love you, Nathaniel, and I'm extremely grateful and proud of you. But yeah, today's interesting. Who's excited about the Fed going to Jackson Hole? What's that mean for us? What's that mean to the market? What's it mean for your retirement? Well, I am glad that you ask, or I asked, I would say, because I can't hear you. Actually, let me pop in a cough drop. My allergies are getting better, but getting bad with the humidity levels here. My voice is always cracking. But thank you, Sylvia Roth, for telling me to get some blood work done on a vitamin D deficiency. Maybe that's it. I don't know, but I really don't trust a lot of doctors. They always want to push. I literally went to go to the pharmacy the other day, and they told me, "Would you like your flu vaccine?" I said, "What?" I said, "What? Flu vaccine? Get the heck out of here! I don't want mRNA in me." And he gave me this whole spiel. Yeah, they don't use mRNA. I said, dude, I don't trust Big Pharma, man. Get out of here with that garbage. So pretty funny. Obviously, he didn't know who I was. Not that I'm like some famous guy or anything, but I just thought that was hilarious, man, that he asked me for a flu shot, knowing that they're putting this garbage in all vaccines. Like even the little kids, when they go to school, my 6-year-old, they're saying that he needs a vaccine, and we're not going to do it. We're going to go for the religious exempt. I don't know what they're putting in that crap anymore, man. So, yeah, we need some changes in the school board. Huge problems there right now, man. Absolutely huge problems. But so the Fed, right? The Fed is going, I mean, let's just break it down real quick. The Fed is lowering interest rates, man. And I've told you about TMF. I told you about how to make money off of lower interest rates. But let me just kind of share the obvious. Fed Jackson Hole significant begins. Peloton reports. So we got a lot of earnings this week, particularly. And quite frankly,
our community of experts will give you the resources, tools, tips, and tricks that you need to grow your money. Hey, on today's show, Fed officials, they're gathering in Jackson Hole, Wyoming for the central bank's annual economic symposium. Wall Street looking for any clues about the Fed's thinking around rate cuts. We'll talk to a portfolio manager about what cuts will mean for you, your money, and our own Fed correspondent, Jennifer Schonberger, going to talk about what really goes down at this meeting, or at least a smidge of what goes down there. I'll give you a hint. Cowboy hats, they certainly are worn. And Wall Street is debating the health of the U.S. labor market, but while they do that, we want to help you find a job if you are looking. I'm going to talk to a career coach who's going to give you the 3 things that are likely to land you a job. Plus, inherited IRA rules are changing. We'll tell you everything that you need to know to make smart tax planning decisions. All of that and much more. But first, let's get into this. The US dollar has been trending downward in the last few weeks, and a weaker dollar actually might just be a good thing for consumers here. Here to weigh in, we've got Catalyst co-anchor Madison Mills. Hey, Maddie.
Hey, Brad. So listen, I'm going to break down the pros and the cons here. It's a little bit complicated, but just stick with me and we'll get through it together, right? So the impact of a weaker dollar, it can kind of be a mixed bag for consumers. Let's start at the thing that I think matters most to our audience, which is the impact that a weaker dollar could have on inflation. That's the raising of prices for everyday goods. So the weak dollar can lead to higher prices on imports from abroad. We know so much of the products that we're buying every day are not made in the U.S. If you do have a weaker dollar, that can lead to higher prices on those goods that are imported. That can be more expensive and lead to more inflation. More inflation, not good. Obviously, that's going to be the key thing to watch as you head into Jackson Hole tomorrow, by the way. But again, weaker dollar potentially fueling inflation for those imported goods. If your dollar is not going as far abroad for companies, it's also not going to go as far abroad for individual consumers who are looking to travel, right? Get your international travel in now before we see the dollar coming down even more on anticipated Fed rate cuts, because your dollar can go further abroad if it is a stronger currency than the place you've been going to. That's why so many people have been talking about traveling to Japan over the past couple of years, because the yen has been so much weaker compared to the dollar. And that's also, by the way, what leads me to my last point here, which is if you do want to become an investor that's looking into trading currencies, getting into global investment opportunities, this could be a good opportunity for you. If you utilize the weaker dollar to get into assets abroad, think foreign stocks, foreign bonds, even foreign currencies, you can use that weaker dollar, trade into something a little bit more expensive. And when you sell out and convert that back to the dollar, you're going to be making even more money. That's exactly what happened with that unwind of the carry trade that happened a few weeks ago and led to the market rout in the US. So many institutional investors were doing the exact trade that I just mentioned with the dollar yen that it led to a little bit of a sell-off in markets when the Bank of Japan did raise interest rates. So it's going to be really critical for you to watch what central banks globally are doing if that's an investment opportunity that you want to get into with a weaker dollar. Of course, not giving financial advice on that, but it is an opportunity for investors. So again, just to summarize here, the totality of information on a weaker dollar. Yes, it can raise costs for consumers when it comes to individual goods. And yes, it can make traveling abroad a little bit more expensive.
So she goes on and talks about, obviously the woke media is talking about like the dollar going down. They will never say the dollar's crashing, but the dollar going down. Look, it's an imminent. When we have high inflation, it doesn't matter what happens to the dollar. The inflation is going to supersede the cost of the dollar. Look at Zimbabwe. Look at all these other third world countries, even Venezuela, where inflation went over 1,000%. Thank God we don't have that here. But this Fed meeting is going to be interesting because they're going to be forced to lower interest rates. And I don't think it's going to be a quarter basis point. It's going to be a 50 basis points. I'm thinking it's going to be a whole 100 basis points, maybe 50 at first and then 100. But they're looking at a 1% rate cut, which is going to send sound waves to the stock market. Guys, I will say this. Let me see my disclosure here. Everything on this podcast should be used for information education purposes only. I am a financial advisor. I'm licensed. However, this is not investment advice. If you would like investment advice, then give us a call, 813-448-3446, or visit us online at cortezwm.com, and we will be glad to give you our perspective on your current portfolio. So going into this volatile moment, we're at this point, and I'll show you the charts here in a second. We're at this point where we're at that 22nd, 23rd bull run of the market from the complete trough of 2022 all the way fast forward till now. We're almost at that all-time high. And once we hit that all-time high, and we're literally about to kiss it right now, once we're at the all-time high, things will start to happen. Either we're going to blow past this all-time high, or we're going to hit that ceiling and just come right back down, that resistance level, and come right back down. And if we do, it'll be a 40-50% retracement that we're going to see. And it happens to be right during election. Like, you cannot plan this out better than that. You cannot plan this out. Also, the yield curve is slowly uninverting. Like, we saw the yields start to go back up. And so we're going to look at the 2, the 5, and 10 year, and you'll see that once this thing uninverts, that's when the volatility happens. 90% of the time, when you have an inverted yield curve of 2, 5, and 10, when they're just the 2 years paying higher than the 5 or the 10, fully fanned out, uninverted yield curve, 90% of the time, we will see a recession within 18 to 24 months. It doesn't happen immediately. It's the unraveling of that uninversion, where we see a lot of volatility happen. So I just wanted to remind you guys that interest rates are going to go down, but you got to be prepared. On the insurance carriers, they're already dropping interest rates. Like, the insurance carriers are the insurance companies that have IRAs, 401ks that can guarantee your portfolios. They have the best traders on Wall Street, guys. It's not the hedge funds anymore. It's the actual insurance companies and their trading floors and their trading departments. It is insane what they can do. And since they have all the money, they can hire the best traders. So here we go. Let me show you this real quick. All right. So we are looking at, let me pull up another layout here, guys. So this is a SPY. And what I wanted to show you is, do you see, this is the S&P 500. I just have the SPY up. So here we are, August 2024. I'm going to fan out a little bit to back to July. We had this all-time high on the SPY. It was 565. We are almost there. Right now we are at 560. So once this thing farts, sneezes, or hiccups to the upside, we're going to hit this all-time high right here. Could it be this week? It possibly could, with the Fed interest rates rate cut. It could be next month. I don't know. But once it hits this level right here, 90% chance it will bounce back to a massive level. This is a classic touch and go formation that we've been learning about. And we could be a month out. So the thing is that this bull run has been going on all the way from the end of 2022, right where this orange line is, all the way up here, 22 to 23 months forward here. So once it hits this level, the average bull run will literally die quick. And so if I get my Fibonacci tool here, yep, and I put it from bottom to low, bing, right there. And hopefully you guys are catching. I'm going to actually take me out so you can see a little better. Yeah. So here's the deal. I mean, we have this situation, guys, where you see where it hits this level and this green area, this 50% right here. That's where that target is at. So once it hits this level, man, boom, it'll come down crashing like a bouncing ball in the hallway. And this will be the new floor. So on the SPY, we literally could be at a huge level, 50% retracement right here. So we got to be extremely careful, man, like as we get into this. And if you have basic stocks, right? If you have stocks that are just out there, mutual funds, portfolios that you're really not even managing, or you're relying on your advisor to manage and he's just sleeping at the wheel, relying on third-party money managers, you need to be extremely cautious right now. So if you have stocks right now, what are you doing? And you're retired. Like, what are you doing? The market will go up. Like I said, we have a lot of bullish power going on right now. And let me show you the same some other tools here. So yes, we see a lot of bullish power here, and we will get that that surge. But we're getting that surge right into that ceiling. And with the Feds lowering interest rates, all this is going to do is just going to really, really trigger the stock market pretty high and bring volatility. So that is actually not the SPY, that's TNA. I could talk about that for days. So here we are. Look at that, man. We're like right there, dude. We're freaking right there. So once we hit that spot, like bam, it would just come crashing down. All this is going to turn red and people are going to panic. And I think we can be there this week. So I'll know this weekend after you know their announcements, but we're going to, or the Fed notes, I would say they're going to discuss it in September. But I think we're going to see a rate cut in September, basically on all the insurance carriers. Wall Street is pricing it in. There's a lot of people thinking that it's going to blow through this. There's a lot of people thinking that it's going to just slam 50%. So in this type of situation, the volatility index is a winner. And you can look at VIXI. I'll show VIXI here in a minute, but I just wanted to show you that this formation that we're in right now, once it hits that certain level, it will come crashing down. Huge percentage. So I'm like a kid in a candy store. I'm waiting for this thing to short. It could come early this week. It could come in the next month or two. We're at that 22, 23 mark where something's got to give. Like we've had 22 months. I got a golden cross right here. Green boxes everywhere. When I get these blue boxes, that means the markets are going up. So possible target 560 all the way down to 440, maybe even 402 on the SPY. This is huge, guys. The volatility index is starting to creep back up. It was 12, 13 months ago for like a year, and now it's at 16.78. So things are brewing up, man. Things are brewing up, and you got to be careful because it is a catching falling knife situation. But once we hit this level, man, I'm guessing it's just going to go cracking down, bro. This is pretty serious, man. Again, this is like forecasting the weather. You know, we have spaghetti models, and the weather can be manipulated. The market can be manipulated. And I'm just reporting the best I can. Obviously, this is not financial advice. I am wrong sometimes. I'm not perfect. But I do watch this every single day, and I trade personally. And this is some of the things that we're just looking at in my mastermind groups. So yeah, I'm just really fascinated right here, guys, at looking at this S&P. I got nothing but bullish power, green lights, short term and long term. And it's going to be interesting. So, one thing I do know that they're going to lower interest rates. So, you guys have followed me for a while now, and three times the leverage. So here I am. I got green. Last time I showed this, I didn't have all green. So you would, in all seriousness, like, this is not investment advice. Should be used for education purposes only. But hypothetically, because this thing is at lows of 57, I have a gold cross right here. And if I pull up my other analyzer here, this is huge, man. Absolutely huge. Now, this is a 20-year treasury, of course. But you have to understand that this is never guaranteed. And you should only use money that you can afford to lose. Even though this is a very high probability trade, if you think interest rates are going to get lowered, then you could essentially look at this trade and make a ton of money off of it. But this is my trade of the year, probably the best setup for the year. We know interest rates are going to get lowered. They can't stay this high. The dollar's weakening. So they're going to try to lower the interest rates. And I got 5 out of 6 green bars. And so when I have these green bars, it allows me to be more confident that this is going to surge back up. There's an all-time high at 324, guys. And right now the low was at 38, and currently it's at 57.94. Come on, bro. This thing is going to skyrocket. You literally could buy a call option at 100 strike price, put 5-10 grand, and it'll be worth $50,000 to $100,000 if this thing does get lowered by next month, or even by the end of the year. Or maybe they don't lower it. Maybe it stays the same. Maybe he says, I want to see more cooling information. But the thing is that they're lowering it right before the election, man. And so you can't tell me that the Fed is not in on it. Oh, man, it's just so much stuff going on. So much stuff going on, guys. But what I want to say is that you don't have to be victim of all this. You don't need to learn how to trade. You don't need to learn how to do any of this stuff. We want to help you prepare for this. Like, this right here is a lot of artwork, a lot of confusing things. And we just have to understand that we need to allocate money to risk. We need to allocate money to safety. We need to allocate money to liquidity. And once we have this covenant process built, then you can be successful in any way the market goes, up, down, or sideways. And so you always continually have to have your approach ready that is volatile. And so if you don't have an index, you don't have a money manager, if you don't have anything that has the ability to get out of the market, because the buy and hold doesn't work anymore. You can't really buy and hold yourself into this. I mean, this is like AI robotic stuff that are trading the markets. And so what you need to understand is that you got to have a system in place so that you can protect your retirement. I can't tell you how many clients that call in, they have a lot of fees coming out, they have a lot of risk, and they're saying they want to be conservative. And I'm looking at their statements. I'm like, honey, baby doll, you are not conservative. You're everything but that. So don't let that be you. Give us a call. Doesn't cost you anything. We want to be able to give you some advice on your portfolio. Also, if you give us a call for a limited time, I have a few books left. I will send you a copy of my book, The America First Retirement Plan Process. We talk about how to convert your IRAs into a tax-free bucket utilizing insurance contracts. Also, you can borrow against it to pay your taxes and have a tax-free bucket in 4 to 5 years. Typically, we use a 4 or 5 pay system. that will convert your IRAs into a tax-free bucket so that you're not suffering from the edicts of RMDs as well as Social Security issues. So if you make a lot of money while you're taking Social Security is a welfare program, and you're not allowed to make over $23,000, $24,000 a year, or you'll be penalized 50%. And that includes the money from your IRAs. So for you that have IRA money, my mom's calling me. Hang on, let me pick it up. She doesn't even know. Hey, mother.
Hey, son. How are you doing, baby?
I'm good. You're live right now on my podcast. I'm recording. Can I call you back?
Yeah, call me back. Okay, don't forget. Call me back.
All right, I will. All right. Oh, man, that's funny. I got to pick up, man, from my mom, right? So I forgot what I was saying. So you have to understand that we have a system in place that can help you navigate these tools. You don't need to be subject to it. So anyways, with that being said, guys, I don't have a scripture today because I got to run, but I'll spend a little more time on it this weekend. So stay with me to this weekend and let us break down the charts even more and talk about how to strategize with all this and a lot of the politics. A lot of the politics are here. And so we need to make money off of this politics. I did say that I am going to be coming out with an inner circle. You guys know I trade personally. I don't trade client accounts. Don't want to do that yet. But maybe one day I'll start my own hedge fund and I'll do that. But what I do want to start, and I'm working on it, in 6 to 12 months, we're going to be doing an inner circle, and I will be charging for it, but I will be trading one index, maybe the S&P 500, because everybody has access to it. And I'm going to give you buy and sell signals, and our goal is to make 100 or 300% a year doing so. I am actually beta testing something right now. Right now, it's profitable, and I'll be happy to share my screen with my trades. But yeah, I'm coming out with that. I got to get lawyers involved and make sure everything is on the up and up because I'm licensed and there's a little trickery there that I have to do, some special things I have to do, make sure I'm good. But with that being said, I'm out of here, guys. God bless you. And don't forget to visit my website, cortezwm.com, or give us a call at 813-448-3446. Or you can download our free guide at americafirstretirementplan.com. americafirstretirementplan.com. Get your free guide, and you can learn about the color of money and our process. That being said, guys, I'm out of here.